bonds are trading in 16% region. And like the last auction, you didn't see a lot of participation from a lot of the corporates or a lot of investors. And that's why you saw the bond yields more or less spike, because in terms of participation, it was grossly undersubscribed. For something that was about 16.5, when the auction result came out, it closed at 16.8%. And really, I wouldn't blame them. In terms of the yield curve, it's a bit inverted. So for the longer term tenured ones, the rate is high. Why for the shorter tenor one, the rate is high. Why for the longer tenor one is low, which would be the opposite. So in terms of risk-free, in terms of real interest rates for the bonds is very minute. So for instance, this is your lovely suit that you're wearing. Let's say you bought it maybe 400K, 200K, and you invested the money, and you're probably getting a 10% or a 15%. And the same material has probably increased by about maybe 16% or 70% based on inflation. That means in a year's time, I might not be able to afford that same suit because the cost has risen more than your investment.
Yeah, if anyone is willing to buy this suit for 200 or 400,000, please let me know. I'm going to push out my phone numbers and contact at the end of the show. You want to pick this up for about 200, 400. I don't mind taking that money and invest it in treasury bills. The yield is going to be really high. Thank you for pricing this that much. I wish it's that much. Wish I could afford something about 200, 400. I'll have to earn a lot fantastically on the markets to be able to purchase that. But very interesting. So this sentiment, what do you think moving forward will be the basic investors and traders' sentiments as far as fixed income is concerned? We're getting our GDP numbers. We're getting into another MPC decision-making in 2 weeks' time. There's going to be August inflation. So the next 3 weeks is going to be very crucial for everyone to say, look, I'm looking at my portfolio. Do I have an idea what the central bank will decide? Do I have an idea what Yemi Kale's NBS will come up with August inflation? And I'm looking at Q4, which is just 30 days or less from where we are right now. Do I need to cut to the chase and home and dry before December kicks in?
So for GDP figures, I think consensus is that Nigeria's economy is experiencing an improvement. So while I'm not too certain I come out of the woods for these Q2 numbers, but for Q3, definitely. So my prognosis is that even if you don't come out, it's going to be within 0.1% negative. That's my prognosis. And of course, every indicator, every market reality speaks to that. PMI figures that we saw from CBN last week as well, we saw the PMI figures above 50, and this is like the 5th consecutive month. You saw earnings have generally improved, which more or less speaks about the general economy. So things are improving generally. So in terms of GDP figures, we expect better numbers. But for the MPC, when they meet later in the month, I think it's still going to be status quo. If you notice their body language last MPC, 2 people voted that, 2 of the committee members voted that they should bring down rates, while the others voted for rates to be maintained. And one thing they mentioned was, okay, they think rates should come down, but they are mindful of the gains that they've seen in the exchange rate. They are mindful of keeping real interest rate positive. And that really has not really changed. And if you notice, we've still seen aggressive homo insurances almost on a daily basis. So that speaks to the fact that things have not changed so much. So I expect status quo in the MPC. I expect GDP figures to speak more or largely to the fact that the economy is improving. I think another thing to watch out for is the FOMC meeting that's coming out.
The U.S. Central Bank.
US. So the U.S. economy has improved significantly. The large GDP figures they came out with was that the economy was growing by 3%. So there might be another possible rate hike. There was a rate hike in July. So really, if there's a rate hike, the influx of FPIs that we're expecting in the country might not be as much as we think it might be.
Right now, a lot of investments are going into the United States.
Yes.
That's the news. A lot of monies are pouring into the U.S. assets because of the economy growing. Inflation is still, the jobs numbers are not looking really bad, as it were. Yeah, so it looks like whichever way the Trump's administration is looking, so that will be part of the consideration. But if we talk about the Buhari's administration, the Trump factor, you guys have a phrase for it already. But as far as our own government is concerned, where do you think this government aligns itself a little bit with Godwin Emefiele and the rest of his MPC members that, look, keep the exchange rate a little bit nice where in that corner. We can keep one eye on interest rate, at least for now. Do you think that's the body language, if that is helping to pull the economy out of the muddy waters of recession?
Well, the fiscal authorities want the rates to come down. The monetary authorities also attest that the rates must come down. Is that consensus? That's what we are waiting for. So obviously, nobody can do business at this expensive or this high interest rates. It's bad for business. It's killing business. Profit margins are very slim. But the question is when. So really, which one would you rather prefer? Is it interest rates or is it exchange rates? Is it the economy? So broadly speaking, I think they need to come into alignment.
In terms of speaking seriously, well, everybody understands interest rate has been really sticky to the north. Not for one, not two. We've had that for a few years. Yeah. But I'm sure if exchange rate goes wacky to 1,000 or 500 again, Godwin Emefiele's job may be on the line faster than he thinks.
I didn't
Isn't
say
it?
that.
I'm saying that because I remember December, January 2016, 2017, it was really hot out there when we were breaching 500 to the dollar.
Yes, yes. But I think fair enough because the external reserve has been robust. So at 31 billion USD, you have enough armory, you have enough arsenal. That's more or less more sufficient than 3 months of import cover. So really, they keep defending the naira against the dollar.
Okay.
So as long as external reserve remains robust.
I got that. So as long as that remains robust, Godwin Emefiele and the rest of his team may as well take a back seat, kick off the shoes a little bit, and watch how the exchange rate goes.
Yeah, definitely.
Interesting. Thank you very much.
Thank you, boss.
And thanks for sharing part of your holiday with us. Some of you who have long holidays, we intend to slash some of it and get you here onto the program. Head of Investment at Codros Capital. When we return, one of Nigeria's intractable socio-economic problems is unemployment. So let's see what new thinking could be brought in to tame this monster. That's coming next.